and pick Wednesdays and Fridays as your days to trade. But you never know what's going to happen in these markets. So best to be here present each day. Um, and what we'll do is we'll start with, first of all, what on earth went on? Why don't we look at that? So, um, in summary, as we mentioned at the start of the day, I think in the meeting we talked about it. Markets have got their knickers in a twist, basically, all around the Federal Reserve, with anticipation of, well, you've got this government debt crisis in inverted commas. Um, we've been here many a time before. I mean, they could still pull something out of the bag and avert a shutdown. I think they've got until, is it Monday or something? So Friday could be the day, tomorrow could be the day. I don't know, but we've been here many times before. um, and even still, I mean, is it really going to be that impactful on the economy? Probably not. Um, but regardless, I mean, the dollar is picking up a bid. Regardless, it's a safe haven currency. It's the um, least dirty shirt of currencies in the laundry basket. Look at it that way. When you compare the economy of the US to Europe to Australia to China, um, and it's the world reserve currency. You know, it's the world is suffocating in debt, and it is all denominated against the US dollar. So when debts need to be paid off and serviced, the dollar is under demand. There is a euro dollar market. It's not the uh, cash euro dollar. It's essentially it's the debt market. It's all in the money markets, but it's known as the euro dollar market, and essentially everything is serviced in dollars, and the repo markets and so forth, the swap lines, etc. When there's pending turmoil or pending risk as per the global economy, U.S. government shutdown, and so forth, the dollar comes under demand, and yields rise when it's a risk-off environment. Yields rise. That's weighed on stocks. Do not ask me why on earth they bounce back the way that they do. I mean, the way that they did. We're coming up to the end of the quarter, start of a new quarter. Um, you can often find that the last week of the month is a little bit loco. So there we are. I mean, basically, it's a risk-off dominated setting with stocks and bonds selling off and a stronger dollar. Um, and there was limited progress on the spending bills in Congress that is needed before the 1st of October. So that's essentially where we were at. And the US durable goods data was a pretty outstanding number. And, it really shone out. So the initial sell off in the dollar was, well, there was a spike high and then a sell off right ahead of the Wall Street Open. I don't know if you noticed that. And that was a telltale sign that, if we're dumping into the Wall Street Open on the back of very solid data and against a backdrop of pending doom, whether it's COVID rearing its ugly head, geopolitical risks, concerns over China, etc., blah, 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 um, and hawkish commentary from Fed speakers with prospects of a uh, rate hike or two before the end of the year, then you've got to be thinking, well, we're dumping before the pump. And if we get a pump in the dollar and yields, then inevitably US stocks are going to sell off. So that was the trade. in the stock market, and I don't know how many of you picked up on the tip in the chat, but um, I talked about shorting the Dow, and I got spanked on the Nasdaq for whatever reason. It came up in the Wall Street Open to work against the London highs, so I was dragged right up into those under significant water on a very high risk trade in terms of value. And then I was able to work my way out of it and get out at last month's low. So that was nice. But we can look at these scenarios ahead of the Wall Street Open and make a thesis. So that's essentially what we did there. Um, Now then, just give me a second. Let's look at this then. So the dollar. Um, I don't know whether the Aussie will go up. I mean, it should do really. Yesterday's August monthly CPI indicator showed an acceleration in annual inflation to 5.2% year on year from the prior, that was about 3 basis points lower. Um, and also the trim mean inflation was also stable. Um, but it may not be a game changer for the RBA, but nevertheless, it should be offering some stability to the Australian dollar. Now, if we do get a correction, let's look at that Aussie. If we do get a correction in the US dollar, that's on a weekly chart. Let me bring this down to let's bring it down to the hourly. If we do get a nice correction in that dollar back down, then yes, I'd expect the Australian dollar. I mean, it's already trying to put in a really nice looking V-shaped or A bottom, whatever you want to call it, peak formation. Are you what are you? Are you long the dollar, Aussie dollar? Talking to Malik. So we're still front side of that bearish trend. Yeah. Okay. So, what the line in the sand for the Aussie on? Let's go down to a 15-minute chart. Well, you're looking all right, I would say. We've come up, we've tested, broken the look that structural point there. Okay, so if you look that on a 1 minute chart, you'll see that we really have been working above that. We've come up strong, nice peak through there. So there was an aggressive move out of danger zone for you. So let's not see if we can't just work our way around these lows, chopping and changing in a demand area, so accumulation taking place for you, so that this will work its way out of this danger area and move on up in to test that trend line resistance. If you can get above here again, then more than likely you're going to come up into here. Where did you get long? What price? That's the 1 minute chart. Um, did you get long of Malik? Where were you long, Aussie? Or maybe you're not long. Maybe I've read you wrong. But anyway, I think this can. You've got a lifeline yet. Um, the the US dollar came up into that resistance area we talked about. Strong expansion. Um, we can peter out here. I don't see why we wouldn't. You're shorting Aussie Swiss. AUDCHF. Where are you short from? Mm. Well, regardless, I mean, the market is trapped. So, um, market is trapped up top. You just need that to pull away, don't you? Well, I'd rather be short up high as you are. You've got last month's highs, last week's highs, potential resistance. Therefore, I mean, have we significantly broken? It's not quite a failed breakout, but what you might find is we'll test that again. If you get a rebound in the Australian dollar, this is on the daily chart. Might get a pop up higher before coming lower, but who knows? I mean, just guessing really. But the yeah, I'd say the path of least resistance is in your favor. Shorting at 57.63. Okay. Well, in that case, try not to short. So look, the reason why I have this template as I do, right? This is last month's highs. Let me clear off the chart entirely. So you've got what I use is in the education section on Discord. Is I use it's all of these indicators here. I've explained them all in the Discord in that video. Just trying to find which one is it. This one I get. No, bear with me. Sorry, this one. Right. So this indicator here, what it does is it gives you the daily, the weekly, the monthly highs and lows. So what you can do is you can look at where you are within whatever range that you're trading. So we are in the upper third of last week's low and high. So I want to be looking for shorts while I'm up here. And we're also in the upper third of last month's range. So that's last month's low, last month's high. So you've got a double whammy scenario as well as yesterday's highs to be looking for a short. So try to avoid shorting from, anywhere in the middle. So if you're in the middle or at the bottom, you don't want to be shorting at the bottom of a range. You want to be shorting at the top of a range. Yeah. So you shorting at 57.60 down here somewhere. When did you put that trade on? But you're in an uptrend and you're at the bottom of a range. Three days ago. Okay. So that was on Monday. You shorted on Monday. How did you short it? How did you 57.60 on Monday? Or you meant last Friday? Right. So well, I don't think the market was there on Monday, but the low on Monday was 52.86 or thereabouts. So it must have been last Friday. 57.63. Even down, no. 57, no. The low, you're talking about maybe Thursday. Right, well, the last time the price was down at 57.63 was at the low of mid last week. Yeah, mid last week, which was down here somewhere, right? I see what you've done then. Okay, righty ho. Yeah. So you've tried. Okay. Well, you've tried to short at the highs. So that's fair enough. You've had a false break. You've pulled back in on the inside. You're at support, right? Ideally, you don't want to be selling at support. You don't want to be selling at support. You want to be selling. So if you've come back on the inside somewhere over here, perhaps, even then that might have been premature. Right, you're still front side of the bullish trend. So if we go down to an hourly chart, I hope this is helpful to others as well. I know it's maybe not the currency pair that you want to look at specifically, but it might be worth taking note on this. This is how to approach the market and trade it. So you've come up, you've broken last week's highs, which were put in on last Thursday, the prior Thursday. So this is Monday. Let's put the weekly separators on. Right. So might have been Wednesday you shorted. Yeah. So Wednesday, our 20th, perhaps. Right. So I mean, tell me if I'm wrong. Maybe you've come up, you've seen this burst out, or it's pulling back. It's broken last week's highs. Great. Most breakouts fail. It must be coming lower to move into all of these longs. Nice thesis. No, I wouldn't disagree with that. Um, so on that approach. However, it's about timings and when to sell. So if you've sold at 57.63, where was that? Down in here somewhere. Okay, something like that. So where's support? Support is here. This is the structure, and we're looking for a break of structure. So we've got the break of structure, and now we are looking for an engulfment. Right, this is on the hourly chart. I don't necessarily personally trade from the hourly chart. So we've come in now to a potential support structure over here. Right, so probably want to see that broken as well. Right, so now we're breaking. So you can get involved with that. I don't know, maybe you want to put your stop not in an obvious place where stops are going to be, perhaps a bit higher up, because the market can easily come up and stop you out here. And then you're targeting the origin of I've got that the wrong way around. Stop out of the way, because there's bound to be people are going to bound to put their stops there, and the market will want to come up and retest that. So try and put it in somewhere where you're probably wrong. So not above there either, but if it comes up to there, it wasn't the best trade. And you're targeting perhaps last week's lows, a little bit low there, stops below there perhaps. Okay, so that's fair enough. All right, and you've been unlucky then, because I mean, there's nothing wrong with that trade. To be fair, on the other hand, if you look at that, I mean, why are you still short? Um, you don't want to be running stops or moving your stop loss up. Um, you just, if you're wrong, you're wrong. You move on to the next one. I mean, that was a reasonably good setup. I don't see anything wrong with that. Um, but however, if you come out and let's just look at the bigger picture, though, you're doing your higher time frame analysis, because on a higher time frame, on a higher time frame, have we come up into resistance yet? Is this a market that's trying to correct up? I mean, yes, it is, isn't it? Have you seen? Is this market? I mean, you do have a W formation at the bottom, so I would be in anticipation of a move lower at some point, but I'd want to see this here decelerate. I'd want to see a correction and signs that this market is wanting to sell off before committing to the short, right? So another way to approach that would be to have a look. Has it corrected? Yes, it has. No, it's corrected up into a 38.2. Did that have a confluence? More or less. More or less. But okay, let's say that is. So let's say we've ticked a few boxes um, on your rules. Okay, so that's fine. You've got some, what do you call it? You've got some confluence going on here. So you've got a confluence in here. Okay, that's potential resistance. But this market might want to be coming up. Okay, no, as well. We've got confluence over here. It's come up and tested that low there as resistance. Fine. Okay, I'm happy with this. I would be also looking for an opportunity to short. But this is on a weekly chart, mind you. But you want to see a deceleration of that move. I don't know if you're looking this on a daily chart or what was your trigger to start looking for a short? Because for me, there's nothing here that's saying that this run has petered out yet. You follow me? Right, so you're on the daily chart. Thank you for confirming. So I don't see any reason why this is turning lower. Have we got a lower close? No. What we should be waiting for is something like that, right? A doji, an opposing candle, a different color candle, a bearish candle, and then I'd like to see, well, something like that, right? I'd like to see an engulfment of that candle there. So we've pretty much got that. At this point, what I'll do now is I would start, I would look to see, I'd want to see this trend line broken. So I want to see this trend breaking the trend line. Once we've got that, we've got confirmation that this is now a decelerated market. And then what I've been in anticipation of is a retest into the consolidation before the drop. I hope that makes sense. So I'd want to see that all as resistance, and we would have had some lower term time frame price action in here to confirm that. So if we now move on to, say, a 4-hour or even a 1-hour chart, but we'll do a 4-hour chart. So this is the stuff that I'm looking for, right? It's chopping sideways. Now I want to see, where is my structural level? Well, we've come up, we've come down, We've come up and made a high. So we would say that perhaps this is my structure level, right? So this here, if we get a break of that low, that higher low, this higher low was the catalyst for what? A fresh higher high. Or you can even say, let's move it up to here, right? If we get a break of that low there, right? That is the highest low before the highest high so far. Okay. It's not to say that this can't continue going higher, but once we've got a significant close below that low, so we've come up, down, fresh high. So that high was a bit lower, new high. So now what we're looking for is the price to break that structure. Okay, now we are potentially in a change of character in the market, and we'll only know that if we get a lower high over here, and then we're starting to think, right, well, this looks like this is, we can start looking for a short, right? So at the moment, so we're up to date now. So at the moment, we're coming in to test that low on this drop. So what you can be hopeful for is we've still got 3 hours and 43 seconds left on that clock. If this comes down and breaks that low, we are officially in a market that is breaking down, and you can turn that trend line red for a bearish counter trend line. And hopefully what's going to happen is that this market will start to break down, and you can monitor all of this, whatever happens, and look for a way to get involved and go short with your stop above the highs. If you're wrong, you're wrong. If it comes up and carries on, then you were wrong. If it comes up and you can short it, then great. Okay, I hope that makes sense. Yes? Let me know if you follow. And I hope that was of value to others. No problem at all. Okay, Malik, you're speaking in a different section. You're talking to me in the analyst chat room. We're over in the meeting room, but that's fine. Right. So, sorry guys for those that were waiting for me to continue with what's gone on today. So back to where we are at. So US dollar. So we're up high, guys. Now, same scenario. I'm not looking to short this US dollar or buy anything against it until we see effectively what we've just run through on that other chart. So let's come to a cleaner chart so we can look at this. Right, so what I want to see here, I want to see this candle here be an opposing candle closing bearish. Once that happens, I can start to draw my thesis that, right, okay, I think now we're going to start coming lower, right? But only until we see that close. And it might take a couple, you might get a bearish close and then a bullish close again. You think, oh, right, okay, well, we're not there yet. So you need to see that close followed by another bearish close. And at that point, we can be satisfied that, yeah, this is now probably about to sell off. Right, so that's what we're looking for. And at that point, we can go down to a much lower time frame. I mean, on the 4-hour chart here, so we can come down to, say, even the 5-minute chart, and just look for this price to be moving sideways, bearishly, decelerating, and with prospects of a break of trend. Yeah. So once we get that, we can start looking for our opportunities. I know a lot of you are looking to try and get the bounce in gold. I mean, this move in the stock market, there's no way you can trade that, not unless you want to gamble. You might have gone, right, I think this is the low, I'm going to buy it. Fine, if that's your strategy. But what happens when you do that and it continues? There's absolutely no bullish structure here whatsoever. Um, so trying to buy that just on a whim that, well, I think this is now the end of the rally, end of the sell-off. I mean, even at this point, okay, you might argue, well, we've got a W formation, a break of structure, a pullback, momentum bars. Yeah, fine. But you've also got resistance. Um, so what's to say that that wasn't going to come up and continue lower? So anyhow, so what we're looking for is a break in structure in the US yields, in the US dollar, and then at that point we can start putting our bets on that we're going to see a correction in gold, in the euro, in the Aussie, in cable, and a breakdown finally in the Canadian dollar lower. Right, if you can't see the video, let me reshare it. Right, that should be seeing my video. And if you can't hear me, I will leave the room again now. So just give me a second. Microphone check. Right, I'm back online. Now, hopefully, Yaz, you can hear me, and also you can now. Okay, I've got to share my video again. You should be able to see my video now as well. Right, so let me know, Yaz, if you can see me. Not see me, see my chart and hear me. All good. Right, so does anyone have any other requests? I can look into pairs for you. Because what I'm not able to do is look into a crystal ball and say, right, this is going to happen. We need to watch the markets and look for setups. So even half an hour before the Wall Street Open, and I don't know what's going to happen, but moments before the Wall Street Open, have we got a setup? Was the dollar pumping lower? Yes, it was. Great. Were the stocks up high on the session? Yes, they were. Great. Thesis is, based on that data as well, we don't even need the data, but it's nice to have something else to lean on. It's a confluence. But all the things were lining up there for that short in the what do you call it, in the US 30, wherever that happened. I can't recall that. Over here, right? So we got the breakdown of the market, and it flew off for a runner for the whole day. The NAS was very complicated to start off with. As I said, it dragged me up into the London highs for whatever reason. Stop hunt. But I was able to get involved on the M pattern, and I got out down here. So the short term, so Yaz, you're speaking to me in a different room. Right. Okay. Right. Any other pairs, guys, you want me to look at? Or any explanation as to why I shorted the stock market? You want me to run through the trade or anything? Australian retail sales tonight. Okay. GBP yen. Um, Right, we are still on the front side of the bullish trend. So trend intact, right? Yes, we came down and broke this structure over here, but we subsequently moved up and created a new high. So therefore, we're still moving up. Now, where was the swing low before that swing high? We've got a low here, but that's not the structural low. It is acting as support at the moment, this area at least, but we want to see that break and come into the swing low, which is here. And if that breaks, then the bets are that we're coming lower and lower and lower, because we'll be technically on the backside of the bullish trend. That will technically be considered a broken down market that will likely be heading lower. But for the meantime, I can't short this market because we are still on the front side of the bullish trend. And even if we do break below here, I wouldn't be entirely comfortable shorting it, because there's no reason why we can't break these lows and move back up. I want to be in something that's broken down. So that's the daily chart. If you want me to look at something more recent, or we can look at the 3-day cycle. So where are we in the grand scheme of things? We are within last week's range. So this is last week between those two yellow lines. That's last week. This is this week, right? And we are in a bearish environment, right? So the odds are that this will continue lower all the while that we're in that bearish trend. However, that's not to say that I'm not going to look to buy it if we are down low. So we're down low. We had a break in structure, right? We came up, we broke structure, we came back in, and we had yesterday's closing price in here somewhere, 181, call it 181.20, just to round it up, acting as support. So when that market came up and broke the old resistance over here, the lowest, the lowest high before the lowest low. This is the lowest low. That was the lowest high. So in a market that was dropping like this, right, that then becomes resistance. So in that move up, right, we've broken resistance. Great. So now we are on the backside of the trend, and I'm looking for an opportunity to buy low at support above yesterday's closing price, or at yesterday's closing price, for the run on yesterday's the prior day's highs. So we're not there yet. It's all the way up there. Okay, but that's what the trade would have looked like had I been trading sterling yen. That's what I would have tried to have achieved on the day. Something like that. Buying in there for a move up. Right? Now, that being said, remember we're still on the front side, however, of the broader trend. Still on the front side of that bear trend. So just a bit of caution in trying to go long in a bearish market. But that's not to say that that we can't attempt to take the longs if an opportunity arises, because at this point here, when we broke that structure, when we broke that high there, where was it? It was up here, right? So once we broke that here, well, this then turns to a bullish counter trend, right? So we've broken that meanwhile micro trend. So from there, came down, up, consolidated, down towards last week's lows, right? Breaking structure, fine. Well, why not? Why can't we take a long? And you know what? Why don't we just target the more dominant trend line? Because the likelihood is that it's going to come up into here, respecting as it has done all the way down. You know, it's been doing that all for quite many weeks. This sort of thing. Probably going to do it again. So no reason why we can't be looking for a long within the bearish trend into the resistance line. Okay. So there we go. We didn't I give you sterling CAD a minute ago in the, was it someone else? It was Malik, wasn't it? So I'm just going to repeat the sterling CAD I did with Malik. I even made a video, but there is that's the diagram I drew. Oh no, is that the video? Might be the video. Yeah, that's the video, and there is the hold on. Copy image. That's a snapshot of where the market is at the moment. So I'm, that M formation, looking for a move up. So check out that video. Same scenario for sterling New Zealand. Very similar scenarios. Virtually the same scenario there. I mean, with the sterling New Zealand, you've got the price that's come down into last week's highs. What are we doing? Hold on. Last week's lows, sorry. What is that? Where was it? Right, it's late in the day. I'm starting to lose concentration here. What is going on with this thing? Right, so last week's, yeah. So we've broken out of last week's lows, and most breakouts fail. So we're coming back up into the breakout. You've got breakout traders that are now getting squeezed, and there are prospects of a move up into all of those shorts on last week. This week started out, yeah, it's all a bit consolidative, nothing really going on. I would say that we're accumulating to go up. Right, guys, I'm going to have to leave it there. I'm starting to nod off here. You can't, I don't know why you can't see the live stream. Right, well, I'm recording this, so I'm just going to send you the recording. Yeah, as well, you can't hear me either. So, okay, guys, I'm going to leave it here. So, yeah, volatile day, guys. Maybe more volatility ahead. Remember, now we're in the middle of the week. We've got Wednesday and Thursday to set us up for Friday. So I'm not going to be too keen on doing too much tomorrow, but it does depend on how the land lies. Let's see how Asia and London sets us up. If there's something that's screaming out sell or buy, if it's a very obvious, like taking candy from a baby type of trade, fantastic. But if there's something that we've really got to work out to try and make it fit, you know, an ideal setup, but it's not really ticking all the boxes, then I'm not going to go near it. I want to end this streak this week strong, heading off to Barcelona on Saturday. So I want to be arriving at the head office all smiles and certainly not worrying about losing trades on Thursday and Friday. All right, guys. So no problems there. Thank you. Okay, appreciate you all. Have a great one and see you all tomorrow.